Welcome to Invested Insider, your trusted source for the latest financial news and insights. My name is Amelia Hawthorne, and today is the 10th of August of 2023. Today, we're going to dissect an exciting topic: dividends, share buybacks, and the Dividend Aristocrats. We're going to take a deep dive into these financial mechanisms and what they mean for you as an investor. To help us better understand this, we're joined by our resident financial analyst, Jason Reynolds. Welcome, Jason.
Thanks for having me, Amelia. It's great to be here.
Let's jump straight into it. Jason, what can you tell us about dividends?
Sure, Amelia. So, dividends are essentially a portion of a company's earnings paid out to shareholders. Regularly paid dividends could be seen as a steady income source for investors. But remember, dividends aren't guaranteed, and they can vary, as they're at the company's discretion.
Right, so the dividends are directly linked to a company's performance. If a company is doing well, the investors get a piece of the pie.
Exactly, but investors need to be cautious. High yields might seem attractive, but it's vital to understand the company's situation. If the share prices have dropped due to lower profits, dividends could be lower in the future.
So that's dividends. Now let's talk about share buybacks. Can you explain what a share buyback is?
Absolutely, Amelia. A share buyback is when a company uses its extra cash to repurchase its own shares from the marketplace. It's a different way for companies to return money to shareholders by decreasing the number of shares available, which can increase the value of the existing shares.
So as an investor, if a company I've invested in decides to buy back its shares, I end up owning a bigger slice of the pie without doing anything?
Precisely. Warren Buffett once said about Apple, "We own about 5%, but I know I don't have to do a thing, and probably in a couple of years we'll own 6% without laying out another dollar." But again, this strategy is effective only if the management believes its shares are undervalued, and it's done for the right reasons, not just to artificially boost stock prices.
Now let's move on to the Dividend Aristocrats. I must admit, I love the sound of that term. Jason, can you give us some insight into who these aristocrats are?
Indeed, Amelia. The Dividend Aristocrats are a select group of S&P 500 companies that have increased their dividends for at least 25 consecutive years. They are perceived as high-quality businesses, but not all make equally good investments today.
Right, and we've seen that these aristocrats tend to perform well even during market recessions.
Yes, that's a key takeaway. The aristocrats have historically seen smaller drawdowns during recessions versus the S&P 500 due to their ability to generate strong cash flows, which often allows them to gain market share. However, it's essential to note that past performance isn't always indicative of future results.
Fantastic, Jason. Today, we've learned about dividends, share buybacks, and the Dividend Aristocrats. We've seen that both dividends and share buybacks can be beneficial to investors, but it's crucial to understand the underlying reasons for these financial decisions.
Absolutely, Amelia. As always, understanding the company's financial health, market trends, and your personal financial goals is essential before making any investment decisions.
Thank you, Jason, for your insightful analysis, and thank you all for tuning in. Remember, invest wisely, and we'll see you in the next episode of Invested Insider. Bye.
The Invested Insider podcast does not offer any financial, economic, legal, accounting, or tax advice or recommendations. The information provided in this podcast or on the associated blog should not be construed as investing or financial advice and should not be considered professional advice. The views, opinions, and content presented in this podcast do not represent the endorsement or approval of Invested Insider and assumes no responsibility for the accuracy or completeness of third-party materials or content referenced in the podcast.